All right, the Bank of Canada has finally made their first interest rate cut 2.25 years into the tightening cycle. And honestly, I can't even believe that we've made it to this point. It feels like it's been forever, but at the same time, it feels like it just flew by. I'm that agent Kelly. I talk about Canadian real estate and my local market of Abbotsford and the Fraser Valley. And if you're into that, subscribe to the channel. Like this video, and if you want early access to pre-sale deals, sign up to the Equity Club using the link below in my description. So let's take a look at what these guys are saying. Bank of Canada cuts benchmark interest rate by 25 basis points to 4.75%. So here in the quotes, with continued evidence that underlying inflation is easing, Governing Council agreed that monetary policy no longer needs to be as restrictive and reduced the policy interest rate by 25 basis points, the Bank of Canada said in a statement. Recent data has increased our confidence that inflation will continue to move towards the 2% target. Get ready for more active real estate market, says broker. So I actually agree with this, right? So I think, from affordability standpoint, is this really going to do anything at all? No. I mean, this is going to instantaneously affect a very small subset of people that have floating variable rate mortgages where the payment actually fluctuates with the interest rate. Again, that's a very small percentage of people. Most people are fixed, or they have a static variable payment where the actual, the payment doesn't change, but the amount of interest that they pay every month within that payment changes, if that makes sense. So from an affordability standpoint, this isn't really going to do much, but from a market sentiment standpoint and an overall, positivity and feeling within the market, this is going to have a pretty big effect, I would say. Dovish tone, expect another cut in July, 2 more after that by year end, says CIBC. That'd be nice. With economic indicators meaning there wasn't a good excuse to not begin with the process of moving rates lower today. The opening statement for the press conference noted that it would be reasonable to expect further rate cuts if inflation continues to ease, although it is also reminded investors that decisions would be taken one meeting at a time. Financial markets had mostly priced in today's cut to the overnight rate beforehand, but long rates and the Canadian dollar still move lower on the news as a perceived dovish tone suggests the likelihood of a greater number of follow-up moves. We continue to forecast a further 25 basis point reduction at the next meeting in July and a total of 4 cuts, 3 more after today's by end of year. So a full percent by end of year. That would be pretty sick in my opinion. That would put us at a variable rate mortgage of somewhere in the low 5s, like 5%-ish for your variable rate mortgage. So Macklem himself does not close the door to a second rate cut in July. So we get a rate cut and we get dovish verbiage used by the governor of the Bank of Canada. If inflation continues to ease and our confidence that inflation is headed sustainably to the 2% target continues to increase, it is reasonable to expect further cuts to our policy interest rate, but we are taking our interest rate decisions one meeting at a time. We don't want monetary policy to be more restrictive than it needs to be to get inflation back to target, but if we lower our policy interest rate too quickly, we could jeopardize the progress that we've made. So again, what does this mean for Canadian real estate going forward? I think this will have a short-term, this will incite a short-term burst of activity within the housing market. I think people have been waiting for this for a very long time. Sellers and buyers have been waiting to get some type of certainty, some type of direction from the Bank of Canada. And I think that this meeting was good, not for an immediate effect on anything actually changing, but what I think that they gave us was finally some direction. It wasn't just, hey, we're waiting for data. Hey, we're waiting for data. We're waiting for data. They basically said, like, we are, for the most part, planning to cut rates unless something changes. Obviously, they're still going to be, data reliant, right? Like if the data is not good in July, they're not going to cut. But I really feel like the verbiage that they use in this meeting at least gives people more certainty that the cuts are coming, which we really haven't had this year. So what I think is likely going to happen is you're going to see an uptick in activity in the market over the next couple weeks in the short term here. I think especially for pre-sale buyers, because like I said, affordability is unchanged, right? So the reason why a lot of people aren't buying homes is they can't afford to buy homes, right? However, if you buy a pre-sale knowing that, it looks like the overall direction of interest rates are down and things are going to be more affordable, you can make a pretty good speculative bet that buying a pre-sale, this mortgage for this unit should be more affordable in 2 or 3 years when it comes to having to complete on this property. So I think the pre-sale market, which has already been hot, could get a little bit hotter in the coming weeks here. So there it is. There's your update. I'm sure you're going to see 500 realtors post this all over social media anyways, but I thought I'd just chime in, go over this very quickly with you guys. For the people that follow me, appreciate you guys. Subscribe to the channel, like this video, sign up to the equity club down below and get early access to pre-sale deals. I'm that Agent Kelly. I'm making moves to move you. Peace.